Joseph, why has Richard Meddings left Standard Chartered Bank?
That's a good question, which is very difficult to answer at the moment. Officially, Richard Meddings, who's a very experienced sort of banker with 30 years in banking and more than a decade at Standard Chartered, is leaving because of a change of direction for the bank as a whole. They're slapping together their consumer and wholesale units into one business. The sort of strategic rationale for that is quite vague, however, and so it's not clear if that's really the reason Meddings is leaving.
Is this a reason for shareholder concern? Is it a mild reshuffling of chairs that should be ignored?
Well, if we think it's vague, I think shareholders are pretty confused too, because the shares have fallen 3% today. And you have to remember, this comes after a long period of underperformance by StanChart. You know, its shares were down a fifth in 2013, whereas HSBC, another big emerging markets player, was flat. So this discount to the sector is kind of, well, not to the sector, but StanChart was a premium bank.
Right.
And it's increasingly being discounted against HSBC, but even against Lloyds, which is a UK recovery play. Has nothing to do with EM, but it trades at about 1.5 times tangible book. StanChart, huge amount of assets and markets, trades at about 1.2 times.
Right. Looks like a no-growth company at this point.
Well, the contrarian argument, and it is, you have to be contrarian on StanChart at this point to believe the shares will go up, is that it has very strong earnings, it's very well capitalized, it has a Basel III ratio of about 10.6% for now, but if this is going to be a bad year for emerging markets everywhere from Asia to Africa and so on, you have to wonder about the direction of travel.
Right, fine. I mean, 1 year is 1 year. I take a longer view of emerging markets, emerging middle classes, increasing wealth. Surely this is the bank I want to be involved with in the long run.
Surely, yeah, sure. If you're comparing that to Lloyds, which again, the recovery in the UK will end at some point, but it's getting from here to there. If StanChart's ratio falls below 10%, which is really the new standard for investors investing in banks, you have to show that you can sustainably hold your Basel III fully loaded capital ratio above 10% to really be in the game now. If StanChart can't show that this year, if it falls below 10% this year, they will have bigger problems and it won't be solved by this reorganisation.
Like maybe a cash call?
Yeah, it's a risk. I mean, the other lever they can pull is just to pull back on investment in emerging markets and just slow down the growth in risk-weighted assets.
Which wouldn't be good news either.
And it'll be tricky because obviously the trend of regulation is to, focus on risk-weighted assets. If regulators introduce a leverage ratio, for example, that would be a big problem for StanChart. It has a fairly large wholesale business. And so just, stopping investment is maybe going to be a very tricky task. But then obviously a cash call will be very difficult given where the share price is today compared to a year ago.
Thanks, Joseph.